this is the deadline that we've been talking about time and again, right? April 2nd, and the S&P 500, when you take a look at the session before this, the S&P 500 of course finished about 0.4% higher, seesawing between gains and losses throughout the chaotic trading day. When you take a look at the Nasdaq as well, you're looking at the Nasdaq ending roughly just about 0.9% higher. Dow Jones as well closed marginally lower, so you do have a mixed bag coming in as far as the indices are concerned. Quite the topsy-turvy trade coming in as far as all of the three indices are concerned. In fact, stocks have come under pressure as uncertainty around Trump's tariffs is something that has spurred recent market volatility. So you're seeing a little bit of that coming in at this point, with the broad market index also down 5 of the past 6 weeks in fact. However, some investors think that the sell-off is overdone at this point. You also do have, in terms of macroeconomic data, you have Bureau of Labor Statistics reporting the job openings dropped more than expected in the month of February, with available positions also falling to 7.57 million for the month, and that's just below the estimate of 7.6 million as far as that particular data set is concerned. But you do have that April 2nd tariff deadline. That is the one that you should really be watching out for. And when you take a look at stock futures, little changed ahead of those tariffs kicking in, Kanishka.
That's correct. Now moving on, let's get you a crude check. Well, oil has eased off its 5-week highs as traders are weighing the impact of imminent Trump tariffs. Now, Trump is due to announce the reciprocal tariffs on Wednesday, which could intensify a global trade war. However, Trump's threats to impose secondary tariffs on Russian oil and to attack Iran fueled supply worries, limiting losses. Now, the Brent closed 0.5% lower at $74 a barrel. During the session, it was high at $75 a barrel as well. The US WTI crude also fell 0.5% to $71 a barrel. Now remember, these moves come as the White House has so far provided no details about the size and scope of tariffs that it confirmed Trump will impose on Wednesday. Now slower global growth would dent fuel demand, which might offset any reduction in supply due to Trump's threats. Now, remember, Trump had on Sunday said he would impose secondary tariffs of 25% to 50% on Russian oil buyers if Moscow tried to block efforts to end the war with Ukraine. Now, tariffs on buyers of oil from Russia, the world's second largest oil exporter, would disrupt global supply and hurt Moscow's biggest customers, that are China and India. Now, Trump has also threatened Iran with similar tariffs and also with bombings if Tehran did not reach an agreement with the White House over its nuclear program. Prices found some support after Russia ordered Kazakhstan's main oil export terminal to close 2 of its 3 moorings amid a standoff between Kazakhstan and OPEC Plus, led by Russia over excess production. Now, the market will watch an April 5 OPEC Plus Ministerial Committee meeting to review policy. Moving on, now looking at the yellow metal, gold has also paused for a breath after a record run on safe haven demand. The prices eased yesterday on profit-taking but remained near record highs as investors turned to safe haven assets ahead of Trump's planned announcement of sweeping tariffs on countries that have a trade imbalance with the US. Now, spot gold was down 0.3% at $3,113 per ounce. This is after hitting an all-time high of $3,148 earlier in the day. Now, gold, traditionally seen as a hedge against geopolitical and economic uncertainties, closed out its strongest quarter since 1986 on Monday and climbed over $3,100 per ounce, marking one of the most significant upswings in the precious metals history. Now remember, Goldman Sachs raised the probability of a US recession to 35% from 20% earlier and said that it expected more rate cuts by the Federal Reserve. Now, the non-yielding bullion thrives in a low interest rate environment, you must remember.
If you like this video, then like, share and subscribe to ET Now.